Ladies and gentlemen, good day and welcome to Haitong Meet the Sea Q1 FY22 earnings conference call of CAPLIPOINT Laboratories. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amey Chalke. Thank you, and over to you, sir.
Thanks, Fred. Welcome all to CAPLIPOINT Labs 1Q FY22 earnings call hosted by Haitong Securities. From the Caplin management side, we have Mr. C.C. Parthiban, Chairman, Mr. Vivek Parthiban, Chief Operating Officer, Dr. Sridhar Ganeshan, Managing Director, Mr. Muralidharan, Chief Financial Officer, Mr. Satyanarayanan, Deputy Chief Financial Officer. Thank you, and over to you, Vivek.
Thank you, Amey, and thank you, Haitong Securities. We are pleased to welcome you all to our earnings call for Q1 FY22. Please note that a copy of our disclosures is available on the investor section of our website as well as the stock exchanges. And please do note that anything which reflects our outlook towards the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. With that, I would like to hand over the floor to our Chairman, Mr. Parthiban, for the opening statement.
Good afternoon, ladies and gentlemen. Welcome to our earnings call. With your permission, I would like to give you a quick brief about the past, present, and future of our business. As we are aware, we are still in the midst of the pandemic. However, we have vaccines as a preventive care. The second best one is the COVID-appropriate behavior. There is a connect between COVID-appropriate behavior and the business-appropriate behavior, which is the all-important discipline. Indiscipline not only leads to infection, but also creates integrity issues in our workplace. Hence, we need to eliminate the indiscipline from our systems. Now, let us look at our business. We restructured our supply chain, manufacturing, and our marketing for business in Latin America with a focus on products with the following classifications. 80% fast movers, 15% value creators, and the 5% eliminators, which have already eliminated from our list of products. The result is reduced inventories in our books with increased sales profits and cash flow. Latin America, as usual, is the favorite destination for Caplin's business. We sold simple generics, smaller markets, humble employees with no meta-intelligence or meta-cognition, but honest and hardworking. Created Caplin, a progressive machine. Now the progress report is our first quarter report with good fundamentals. Now, let me give you the overview of pharma exports to LATAM. Pharmaceuticals are now the third largest export to Latin America after vehicles and chemicals. Exports to Latin America increased by an impressive 13% to $1.1 billion in 2021. It will not be out of place to mention that Caplin is the early entrant to these toughest markets and became the sweet cucumber in a vinegar barrel. Now, we are all in the business of building our tomorrows today. Today we have 2 API R&Ds, 3 formulation R&Ds, 1 CRO to strengthen our future business. Our new registrations on the existing and the new markets would ensure a sustainable cash flow and profits for future. The new products that are being registered in the existing market will result in a new division to promote the newly registered products such as CNS, CVS, complex injectables, and the oncological products. Our R&Ds are creating a technical superiority to our products. We also started selling specialty injectables in the domestic market. Most of these products are hospital supplies, such as amphotericin rain which is needed and used for black fungus in COVID-19. We are planning to add some more specialties and look for co-marketing opportunities with some established companies in the domestic market. We are also manufacturing a good amount of enoxaparin to Cipla for the domestic market. Even if you have to form our own teams to sell these products, we don't require a big sales force, as these are injectables that are sold only through hospitals, not through prescriptions. A company needs hardly 3 to 4 representatives per state to cover all the private hospitals for these type of products. We have also identified a list of oncology and general OSD for biostudies in our CRO. Our CRO is all set to get the approval from US FDA in 15 to 20 days from now. Once we start our commercial production in the new facilities, we'll be ready actually to launch these products in the markets. We have plans to register our products in various geographies such as Europe, Mexico, Brazil, South Africa in the near future. Now that we have different buckets in the form of specialty injectables, tablets, capsules, and in oncological range for the regulated market, which will definitely give an edge to our company. Let's also look at the new projects and expansion of the existing projects. Caplin Onco will start the commercials hopefully by March 2022. API, we acquired the land. We will start the construction both for general and onco API. Expansion of 2 lines in our Caplin sterols. We have already placed the orders, the details of which our COO will discuss in detail. Products we are planning to manufacture such as not only the liquid injectables and ophthalmic, but also lyophilized products, bags, and PFS. We also have a plan to go for a dedicated line for propofol in our Caplin sterols. Now marketing. Coming to marketing, it's better to follow the trends of the big companies as far as technology, market, and attracting the best talented people. But coming to the market, we must create new trends in the form of a business model differentiation. That's the only way to create sustainable practices for our future. We have plans to look at the second and third levels of the market to create an executable niche which alone will differentiate our business in the bigger markets such as USA and others. The best way forward would be to create a niche which most of the companies of our size could not do, such as US FDA approved injectable facility with our own products in the market. In addition to that, also planning to go for the front-end presence and the backward integration. Further, create a business model differentiation while traveling with the big companies in bigger geographies, but focus on second and third layers of the market. C, create a culture of integrity, quality, transparency as a sustainable business practice. D, attract the best talents with attractive ESOPs in addition to meeting their expectation. The way in which they have to be treated, the way they want to be treated, we need to give that kind of the way they expect to be treated, the expectations in the form of treating them the way they want to be treated. Finally, develop the capabilities to coach, train, and monitor the fresher to retain the talent and prevent the attrition. Finally, the report of financial highlights of top 50 pharma companies in India, which appeared in Chronicle Pharma Biz on July 8, 2021. And we stand at 39th position among the top 50 companies. In 2015, we promised our shareholders that our top line of 2015 will become the bottom line of 2021, which we have achieved with a small difference of some 3 crores. Now our goal is to strive and make it between 20 to 25 position in India in the next 6 years among the top 50 companies. Thank you. Thank you very much.
Thank you, Chairman. So from my side, I will just give a quick brief about our progress in the US, followed by our CFO, who will just give a little brief about the numbers for the quarter. So we continue to make good progress with regards to commercialization of our approved ANDAs with 4 new launches. We have 4 more launches planned before end of the year, which will complete the 16 products that we have approvals for now. The products that have already been launched and completed 12 months, we noticed that the market share has been anywhere between 7 to 12%, and we are actively working with our partners in the US to try and improve on that to make sure that we have at least slightly higher double-digit figures on the market share. Taking into account our intention to have our own label in the US by 2023, by way of our own front end, we sign only non-exclusive deals in the recent past, and we will continue in the same manner. The next few filings, we are targeting 7 to 8 products and to be filed, which will be a mix of injectables and ophthalmics in the next 3 quarters. And by January of this next year, we will have the premixed bag line that will be ready for exhibit batches. And during the same period, we are also targeting the first 4 complex products exhibit batches. And these complex products fall under the long-acting suspensions and emulsion category, mostly in injections and 1 in ophthalmic. When it comes to phase 2, as Chairman was saying, we have already completed the ordering of 2 vial lines from erstwhile Bosch, which is now called Centeron. There is also a pre-fill syringe line from Italy that we've ordered, and also a high capacity lyophilizer. We are potentially dedicating 1 line specifically for emulsion injection filling, of which propofol is a major product. We are already doing propofol in multiple countries in Latin America, and we would like to extend this worldwide, including US and EU. With the capacity expansion, I think we'll be going once again close to tripling our current capacity, which should augur well for us for the next 5-6 years at least. And going forward, rather than focus specifically on US alone, we are going to be focusing more on a global level. So any product that we are taking up for development and filing, we will be extending it towards a global dossier with a specific emphasis on key markets such as Brazil, Mexico, EU, Canada, etc. When it comes to backward integration, it looks most likely that we will be going for our own greenfield project, like how Chairman was explaining, and we target completion of this within 18 to 24 months. And in the meantime, we are working with an FDA-approved CMO plant from Hyderabad that will help us accelerate our DMF filings in the short run. So revenue-wise, not much has changed from our initial projection. When it comes to Caplin Steriles, we stick to the same, and we hope to achieve that and potentially go past it if things go well. That's it from my side. I request CFO to make final comments before we open the floor for questions, please.
Thank you, Mr. Vivek. Good afternoon to everyone who has joined us in the call. This is Muralidharan, CFO of the company. Welcome you once again. The results are with you for the last 24 hours or so. The results are very gratifying. Not gratifying only because of the numbers what we have reported, but also these numbers have been reported at a very challenging time. It shows the grit and determination of the management team and the entire workforce of the company, starting from the chairman to the last worker of the plant who has made this happen. So we are thankful to each and everyone and the guidance shown by the management. As you know, we have also reported that the turnover for this current quarter, so I highlight the current quarter achievements. 2015-16 turnover, entire year turnover has been achieved in the Q1 of 2021-22 itself. Our chairman was mentioning about the profit of sales turnover of 2015-16 being achieved in 2020-21. We have also surpassed the profits of 2015-16 in the very first quarter of 2021-22. Also, for the first time, we have reported 101 point. The EBITDA reported is in excess of 100 crores from the first quarter. And gross margins are stabilized at about 55%. We expect this to be in line in the future as well. The one more important aspect is that last year when we were around this time, we had some aberrations about the market subsidiaries, which are with the great pressure. We want to inform the investors that the integration is more or less seamless and all the subsidiaries are in place, and the results are evident in this respect also. The gross margins will stabilize. The OPEX is in more or less the same levels as we have budgeted, and we don't expect any major hiccups in the profitability as well. The other aspect is that the cash flow operations is 75 crores in the first quarter, and free cash flow is about 60 crores, meaning that we have invested about 15 crores in the form of capital advances and then capitalization, which Mr. Vivek also mentioned. We have ordered certain equipment for our phase 2, and also we have released first tranche of advance for a Onco project during the quarter. The increase in expenses, somebody is raising offline with respect to the Q1 of 2020. My request is that Q1 2020 expenses are not to be compared with Q1 21-22 for a simple reason. The turnover has gone up by about 63 crores. Many of the expenses which are in tandem with the increase in volume are reflected in the numbers presented. For example, the power and fuel, because our factories are working almost 3 shifts a day, without which these numbers could not have been achieved. The power and fuel cost has gone up, and as people may know, the freight cost has increased substantially during these challenging times. Availability of vessels, availability of containers, reefer containers more so for our products are not available, and also as and when they are made available, they have become more expensive. And then R&D efforts were not all that great in the first quarter of last year, where the onset of COVID was there. Current quarter, despite the second wave, our R&D efforts have been geared up, and in R&D also we have spent more money than the first quarter of last year. These are the reasons for expenses. Otherwise, numbers are there before you. I would request Mr. Vivek to open the floor for discussion.
Thank you, sir. Yes, I think we can open up for questions now, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 at this time. The first question is from the line of MS Rajashekar, an individual investor. Please go ahead.
Yes, sir. Good afternoon. Congratulations on an excellent set of numbers.
Thank you very much.
And I was just going through it. You are expanding very well. I know I am able to see the passion. The only thing is that the human resources, I was much more keen to hear from you. In the last Concall or a couple of Concalls before, you told that you were giving ESOPs at ₹2 and then you are attracting talent. So I just want to know what is the talent you are attracting, and what is the human and development of human resources, because when you're expanding, human resources are extremely important. That's my first question, sir. Please.
Very, very true. The most important area, as you know well, is R&D, registration and development for any pharmaceutical company. That's how we create good science. We have some of the people who are working in our R&D, whether it is formulation R&D or API R&D or CRO. They are all people who have at least 15 to 16 years experience, either in a multinational or a transnational company. So we are in a position to attract the talent, as I told you, because of 2 reasons. One, ESOP that ensures their prosperity in addition to actually whatever salaries hike they expect we also give. Second, we also would like to treat the people the way they want to be treated, which means we give freedom for them to actually work also in our facility. The third advantage here, the hierarchy actually is flat. There is nothing in the form of some professional and some kind of a politics which can happen and disturb these executives also. So the people who perform in this company are noticed by us. So I don't foresee any issue. We have not been actually foreseeing any issues that way. We've been attracting talent. Although Tamil Nadu does not have an ecosystem, something similar to Hyderabad, Ahmedabad or Andhra. But so far so good, we are very comfortable, please.
With the permission of the chair, can I just add one point here?
Please.
Yeah, actually, just to supplement the HR, the human resources, the quality of human resources, 4 or 5 years back, if you had seen Caplin Point as an organization, we had hardly not even a handful of PhDs. Today, we are proud to say that we have about 27 PhDs on our rolls who are working on various R&Ds.
Correct.
Thank you, sir. My second question is regarding the injectables for the US. We just came to know that all the companies are putting up an injectable facility or increasing their capacity, especially for the US markets. So with this, I think the competition is going to increase there. How does Caplin want to tackle this competition there? Yes, sir.
The competition is bound to happen in every market today. As I told in course of my speech, what is important is the business model differentiation. As you know well, our business is all about differentiation. Whatever we are today is not because of the market which is in the form of US or India or brand marketing. It's nothing but actually we never chased the brands. We never created a huge actually product brand, but our business model has become a brand. So which means what we have to do in the regulated market is rather than following the trends of the big boys, we have to look at the second, third and fourth layers of the market. I'm sure it's possible. For example, I would like to tell you this one. I was talking to the CEO of my CRO, and he is a gold medalist from Madras Medical College, and he says 72 of his colleagues are working as director and senior directors in many parts of the hospitals in US. His name is Dr. Gunasekaran. Then I told him, will you be in a position to come with us actually when we go to the market to understand the size of the markets and the kind of the purchase they make? He said 100% is possible. In fact, he worked in US. He's the one who created a OSD facility from the scratch to the finish. Only thing he was unable to actually do it in a big way in terms of marketing because OSDs cannot be sold to the hospital. So he told me, we are very sure that we will be in a position to sell to the hospitals because he also told me one more thing. There are 1,100 Madras Medical College doctors working in US. This clearly shows that there is a huge opportunity. We don't have to go and actually replace the importers or actually focus on the importers. We can go one step below. I would put it this way. We have been catering to the bottom of the pyramid in Central America. Now that we will cater to the bottom of the business pyramid, that will take care of our requirement. Thank you.
Thank you very much, sir. All the best, sir. Thank you.
Thank you very much, sir. Thank you.
Thank you. Anyone who wishes to ask a question may enter star and 1 at this time. Next question is from Shalu Asija and from Invest Research. Please go ahead.
Hello.
Shalu Asija, your line is unmuted, but we are not able to hear you that clearly. Your voice is a bit faint. Can you speak a bit loud, please?
Just a minute. Hello. Am I audible now?
Yes, madam.
Yeah. Thank you. My first question is regarding US business. I just want to know what is the profit margin?
Your voice is not audible, madam. We are unable to understand. Please, can you please talk a bit louder?
Hello.
Yes, madam.
Hello. Yes, sir. Yes, sir. Yeah. Sir, I want to know about the profit margin from the U.S. business and expected growth for next 5 years. Like, what is the expected growth from U.S. business?
Okay.
I'll request the CEO to talk on this.
Yes. So if you look at the gross margins from our U.S. business, it's still quite similar to our parent company. So our gross margins are upwards of about 50% even now. The only thing is our overheads are high right now because we expense out all of our R&D and our filing fees and our facility fees. Everything is expensed out as a form of adequate conservatism. So if you looked at the gross margins alone without taking the rest of those things into account, I think we'll be very similar to the parent company. As the revenue starts to grow, as the break-even part comes through and then revenue starts to grow, I feel that we should augment the parent company's bottom line, EBITDA, etc. When it comes to the growth over the next 5 years, the public statement that we've made is we intend to target $100 million revenue from Caplin Steriles, which is the US-based entity, US-focused entity rather, by 2026.
2026. Okay. And sir, what is the capex you have announced? I just want to know revenue will start coming from which year, like after 30 months, or what is the target of revenue when revenue will kick in with the capex announced?
Okay, so when it comes to the US capex, we are basically expanding our facilities in what we call as the phase 2 of this plan, and we expect to complete this within the next 15 months. Now, how it works in the US is a product can be moved between lines within the same facility. They call it the FEI number. If the facility just expands within the same space, it doesn't really need to go in for another inspection or anything like that. Okay, but when it comes to expectation of revenues out of that, we don't really differentiate between our existing capacity versus the new capacity or anything like that. It all depends on when the capacity is available for us to put it to use. So we don't have a breakup of what this new expansion of capacity is going to bring in terms of revenue.
Okay. Okay, sir. Thank you, sir.
Thank you.
Thank you.
Thank you. Next question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah. Hi. Thanks for the opportunity and congrats to the company for doing so well. Satipan sir, can you briefly talk about your venture into the more larger markets of Latin America? I recall you have mentioned earlier in your earlier con calls that you are about to enter Brazil and Mexico. So, what would be the modus operandi? Would we first enter the generic market and then try to build a branded generic portfolio, or do we do both together? Just some details on that side would be very helpful.
Yeah. The larger markets of South America, as you know well, Brazil and Mexico, then followed by Colombia, Chile, Peru. Now that we have completed registrations to the tune of 60-70 products in countries like Chile and Peru. Last year, Peru has grown by 80%. Chile has grown by 56%. I'm talking of exports from India to Chile and Peru. And the biggest markets, they also went for actually an emergency purchase. We also exported some of the products like propofol, dexmedetomidine to both the countries, Brazil and Mexico. And currently, we are in fact, we received one approval from Mexico. We are in the process of filing actually the dossiers in Mexico. Brazil, they have to complete the virtual audit. It has come to a stage where probably in 15 to 20 days time, they will tell us the date, and it will take another 1-2 months actually to complete the whole thing. And coming to the business model, which you said, how exactly we are going to market. If you look at our business in Central America, unlike other companies of our size, we went there and we replaced the importer. This is not possible in the bigger geographies because the companies which are selling actually in these bigger geographies, whether it's from India or from actually the local market, they are all big companies except a very small portion of companies that are small. So you can neither replace the importer nor actually the competitors. We only have to look at actually the second, third, fourth layer, which I told you before, which means any product that goes actually from the manufacturer to the importer, then the importer to it goes through various layers. It will be in the form of wholesalers, distributors, semi-wholesalers, then of course, small retail chains. So it's not that it confines only to actually one domain. You can go to various places and find out which is the best place where you can position yourself to increase the sales, profits, and cash flow. So we will not get into brand marketing because it's a long haul, and we don't have that kind of a deep pocket. Although our cash flow is comfortable, we will be in a position to do generic business, but we will create a niche. That's an executable niche which would do it. We are sure of it. In fact, I worked in Mexico before COVID. Unfortunately, I have not been able to travel now, which the borderless world has closed the borders, and we will have to wait for the COVID curve to flatten, and then we'll have to go there. Coming to Brazil is more of tender business. So it should be like any other company. We'll have to get into tender business, and private market, we'll have to go and work and see the niche, and then we'll have to create something differentiator. That's it, please.
So what I understand from you, sir, therefore, is the first target is going to be the generic, and the tender business in these large markets, and not really the branded generic business.
Branded generic and branded generic, there are two types of branded generic. One is, as you rightly said, brand marketing. You create prescription, it becomes a brand. That's how they do. Another branded generic actually is in the form of OTC, and there is nothing in the form of one has to invest and create prescription through doctors. We may go for branded generics in the form of some OTC and all. That will be in the form of we will go for some associates, and both of us can associate and do it also. That's not going to be very expensive, and the lead time for evolving that kind of a business, the brand marketing kind of a business, is always long. But branded generics in the form of OTCs, there are two ways to do it. You don't have to go to the medias today. You can go through actually the retail chains. There are companies who have 1,000 to 1,500 retail shops in countries like Mexico and Chile. So here, if you can get some associates, that networking effect actually will create business for Caplin also.
Understood. So that's very helpful. And sir, second question on the US FDA audit of our injectable line. If I recall correctly, last we were audited in 2018. So have you heard anything from US FDA? Are they informing you about a potential audit now again?
The last inspection was in 2019, and ever since that we've not had an inspection. Of course, all throughout 20 and 21 there's not been any inspections, but we believe some virtual inspections are happening, and very few physical inspections are happening even in India. When it comes to our CRO, we've been informed about a virtual inspection. They've just started collecting all the documentation from our side.
Right. And so one more question, sorry. This dedicated line for propofol, what is the timeline and how much capital expenditure would that take?
So the overall capex for this expansion in phase 2 is going to be around 140 crores, and this emulsion line, which the propofol line, if you want to call it that, is combined together with it. Now, propofol is a product that we have stabilized very well. Our product is probably equivalent or better to most other companies that you can find here. So we want to launch this as a global product, and we've already started doing fairly decently in parts of Latin America. We want to sort of take this to US, EU, Brazil, etc., where we see that there is very decent potential there.
No, so my question was actually pertaining to, given that you are laying an extra line for propofol, would that trigger a US FDA inspection of the site, or would that not require a separate inspection because the site is already approved and you can just, as soon as you get the ANDA approval, you can just start selling the product? That's what I wanted to understand.
So, Aditya, technically speaking, it doesn't need an inspection. But at the same time, we can't really tell when the US would want to come in to inspect or what they would want to come in to inspect or anything like that. Every time we file a product that is in the US, that would lead to a series of checkpoints that they will have to answer themselves. Obviously, all of that is internal information for the US, but it is what you call, if you want me to get slightly more technical, it's a terminally sterilized product, which means you heat the product up to 128 degrees after you complete the filling. Now, we've already been approved twice for that form of sterilization. So technically, it shouldn't be an audit, but if it comes, it comes. It's, we in the pharma world, especially in the regulated market world, we need to be ready anytime for an audit.
No, that answers my question. Thanks a lot for your responses, gentlemen, and all the best.
Thank you very much.
Thank you. Next question is from the line of Anupam Agarwal from Rati Investments. Please go ahead.
Yeah, hi sir, good afternoon, and congratulations on great set of numbers. Just firstly, sir, if you could highlight our capex outlined is basically 300 crores if I see the presentation. If I walk through the earlier presentation, the number was close to 230, 250. What has increased? Is there some change in the dynamics? If you could just highlight something.
Vivek, can you go ahead and answer to this question?
Yeah. So if I heard your question right, there are three capex outlays that we are going after. So number one is our oncology line. Now, this is going to be overall about 100 crore, 100 plus crore, we feel, 100 to 110 crore kind of an outlay. And we are going to start with the OSD to begin with, and then in phase 2, we are going to take up injectables. Number two is the API piece of it. Of course, we were evaluating a couple of things, but it looks more likely that it will be a greenfield project. This could be anywhere between 50 to 70 crore for both API and oncology API, general category and oncology API. And the third one is the phase 2 of our injectable plant, which comes under Caplin Steroids, but CAPLIPOINT is extending a line of credit to Caplin Steroids for expansion here, and that will be around 140. So all put together, we expect this to be about 300 crores.
Got it. So if you could just just an extension, the 300 crores of capex will lead to what sort of top line over the next 3 to 4 years? I understand it's going to be commercialized in FY24 likely. What sort of revenue one can expect from this?
Okay, so yeah, go ahead.
Yeah, so
sorry to interrupt, sir.
In most, yeah,
we have lost the line for the current participant. So maybe you can continue with the answer, and then we'll move on to our next question. Maybe you can continue with the answer for now.
Okay, so in pharmaceuticals, it is especially in formulations, it's very difficult to put a revenue number as against a capex spend. Right, so it's not like an API plant where you're doing only 5 types of API, and then you put X amount of capacity, you have Y amount of revenue potential from that. So here it's much more difficult. So we would like to broad base it to our original target, which is we expect to double our revenues in the emerging markets, our current markets, in the next 5 years, and we are targeting $100 million revenue in the US within the next 5 years. So we would like to sort of broad base it within these figures, please.
Thank you. We'll move on to our next question, which is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question.
Good evening.
Sir, my first question is on the injectables business. What is the current capacity utilization?
Yeah, at this point, we have 2 injectable lines, 2 vial lines, and 1 ophthalmic line. So when it comes to commercial products, we are probably still at about 45-50%. But it looks a little bit more utilized right now because we continuously file exhibit batches, which is basically the batches that you file for registration in the US. So both put together, we should be at about 70% right now. Yeah.
Sure. And with the phase 2 in the injectables coming on stream, say over the next 2 years, will the capacity be sufficient for us to reach our target of 100 million revenue by FY26, or will we then still need some incremental capex?
No, this 140 crore capex that we are doing is going to triple our current capacity. So that should be more than enough for what we are targeting to file over the next 4 to 5 years. We don't see ourselves going in for another capex for the next 5 years after this.
Okay, sure. And so this facility is still not broken even, right? The break even will be at what level?
We feel that the cash flow break even is going to be at about 120 to 130 crores, and we hope to achieve that within this financial year.
Okay. And so my second question was with respect to entry in new markets. So you mentioned to an earlier participant that you have one approval for Mexico, and in Brazil you're looking at the tender business. Are we expecting any of this to crystallize in the current financial year, or will most of this generate revenue only from FY23?
The business which you're talking about from Mexico, we may get business in the form of an emergency purchase, which we have already received. But the real business will start only, after we complete the registration and when we go to the market. Today we are not in a position to travel, as I told you before. So the ad hoc business that we get actually, I feel is not a permanent solution. It's more of a band-aid solution. However, that also creates revenue. But the real business will start only when we travel to this part of the world.
Okay. So at least in this year, it is unlikely depending on the current situation.
Yeah, so the situation actually does not permit us to travel, and the registrations also doesn't take place the way we want, because during COVID time, even the Ministry of Health everywhere, they work very slow. So we still, we are in a position to do more business because of the fact that our goods are next to the customer in Central America and Caribbean. So that part of business alone actually will take care of our requirements.
Sure. And so we had a JV with a partner, with a distributor in China. Is that also part of our roadmap, or is that gone on the back burner?
No, now we have put it in the back burner, hopefully, because the situation. China, the way in which actually things are happening in the border and other things, I don't think. This was a different case altogether, when we went to China 2.5 years ago. But now there is nothing much in the sight actually, in the form of doing something in China now.
Okay. And
nothing much in sight. Yes.
Got it. And just one last question. While you spoke about 4 launches that you already did in the US and 4 more in 22, what is the number of filings you're looking at for the current year?
We are targeting over the next 9 months. We don't really go by, we try to go by each financial year, but because of all the COVID disruptions and stuff, we have a target over the next 9 months, which would sort of, you could say, that spill into Q1 of next financial year. We are trying for about 7 to 8 filings within Q1 of next year. So that will be 9 months from now. You can take it there.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you very much.
Thank you. We'll take our next question, which is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yes, thank you for the follow-up and apologies for the disconnected line. Sir, I just wanted to ask you, so this 300 crores of capex would lead to what sort of revenue for us at peak utilization of our plants?
Yeah, I think you got disconnected while.
Yeah.
So basically, what we are trying to say is that it's difficult to put a revenue figure as against what capex that we build up, especially in a formulation plant, because there are so many variables that even if we do get into some numbers right now, by the time that the capacity starts to get utilized, it might be a very different landscape altogether, and especially in regulated markets and stuff where there's competition, right? So we would still like to have the overall figure, what we have already given in public domain, which is we expect to double our revenue in Latin America in the next 5 years, and we expect to be at $100 million revenue in the US within the same period, within 2026. We would like all of this to be supported by the capex that we are putting in right now.
Got it. Got it. Secondly, on the API and backward integration front, I recall that we identified around 70% of our molecules which need APIs, and we went into backward integration for them. Incrementally, is it fair to assume that all these products that we are filing, we are going to be backward integrated for them?
Yeah. So our target is, the first target, I would say, is to make sure that we are getting into API for products where API is hard to get, right? So we don't want to go in for secondary source in the first phase itself. It's not a priority for us. That will be second priority. Our first priority is to get into API where the API is currently very, very scarcely available. So once we have that, we want to focus on the next wave of APIs, which is basically cementing our position by having a secondary source, which is our own source in the US. So over a longer term, I would say next 4 to 5 years, our idea is to have at least 70% of all our filing backward integrated with our own API.
Got it. Got it. Also, if I may ask one last question, we were looking to acquire our partners in the LATAM business. We've been carrying cash in the book for a reason. How are we there, and what is the outlook on that front?
I've not been able to hear it properly. Vivek, can you answer this question?
Yes. So our acquisition of channel partners is nearly completed. In fact, we have only one channel partner that we haven't acquired, which is one in the Dominican Republic in the Caribbean. This is one we may or may not do, but basically we would say that our channel partner acquisition project has been completed.
Got it. Thank you. Thank you, and all the best.
Thank you very much.
Thank you very much. Next question is from the line of Mitesh Shah from ICICI Securities. Please go ahead.
Thanks for taking my question, and congratulations for the good set of numbers. My question is regarding your foraying into the Indian market. Can you just elaborate more about this market and the future prospect and your strategy over here?
Which market you said? Please come again.
Indian market.
The domestic market. Indian.
Domestic. Yeah. The domestic market, to be very honest with you, this has not happened by design. When the COVID issue started, we started looking at actually the opportunities. Then some of our friends who are into domestic business, they started inquiring about products such as amphotericin B and other things, and that's how we started it. Now we have found there is an opportunity to get into that area. This is more of actually hospital business. As I told actually in course of my speech, there is nothing in the form of one has to go for a huge sales force to create prescription and do business. This is actually most of the injectables, most of our specialty injectables, the one which we have, the one which you are planning to actually manufacture in future, all will go only to the hospitals, which means what is needed is actually a hospital division. Even if you want to create on our own, or the best opportunity is to go for a co-marketing with an established player. So now that we are seriously looking at it, there is an opportunity, but the size and other things, to be very honest with you, we don't know. But we are still in a position to make reasonably good profits in the area, so we'll continue to do it. And going forward, maybe in the next 6 months, we will know the exact status of the quantum and others.
Okay, thanks a lot.
Thank you very much.
Thank you. Next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I have two questions. One is you mentioned that you're expensing out even the capex on R&D. So is that correct? Any capex on R&D is expensed out?
Correct, yes.
So actually, let me just clarify. What we are telling is that we are expensing out A&D expenses, product development expenses. Few companies have the practice of capitalizing the A&D based on the future life. What we were mentioning was we conservatively don't attach any future value to them, and then we expense them out. When Mr. Vivek was mentioning about the cash break-even and whatnot, this is excluding, if you were to exclude these R&D expenses and filing fees and what, then we are breaking in at about 100 to 120 crores. That is what he was mentioning. CapEx is not expensive.
CapEx you're not expensing, right? CapEx will be depreciated, right?
Tangible CapEx is not expensive. What is intangible like A&D?
That's what I wanted to clarify because the presentation mentions that CapEx plus OpEx both is expense. So I just wanted to clarify that.
No. I hope this is clarified.
No problem. Second, you've grown at around 30% per annum for last 7 years. So next 5-7 years, what kind of growth rate one should expect?
In fact, I put it that way because the goal is to actually move up the value chain. As I told in the course of my speech today, we stand at 39 among the top 50 companies. This report, which has come actually in pharma base, and there was a Toraya report actually sometimes back they came. They also mentioned about our company. So rather than telling in numbers, we would like to actually tell you in terms of position. See, it is very difficult to move from this level to the next level because we are competing with actually some of the giants. If we can move between actually 20 to 25%, one of these actually between 20 to 25, that itself I feel that's going to be a great this one. So
on a higher base, obviously the growth rate slows down. So I just wanted to know
percentage of growth actually is difficult to commit at this juncture, but we will do well. We will definitely do well, but I don't want to give it in numbers in future because the base has become big, and then the next 2 years are very crucial. We will because the business that we are expecting in a big way from regulated markets will start happening after 2 to 3 years actually. Until that time, we will have the growth. Definitely, we will have 20-25% CAGR.
Okay. So my question, let me rephrase my question. What is the scope for growing your presence in Latin America and Africa? Because US will be an additional kicker. So will the growth from Latin America and Africa continue, or you have reached saturation point?
No. We will do very well in Latin America. We will in fact do very well in Latin America. That's going to be our cash cow. Definitely, there is nothing in the form of saturation. But the current market...
That market still has potential to grow, right?
Yes, definitely. In the next 5 years, as the CEO has put it, we are likely to do actually, we're likely to double the business in 5 to 6 years actually in Latin America itself.
Okay. That's it. So Latin America continues and US becomes an additional kicker.
Yes. US and other markets also. We are planning to go for a global dossier. We'll be there. Now that we have the entire range of injectables, right from liquid injectables and lifeless products and various forms of general injections and oncology injectables. So there is a huge scope. We have tablet, capsule, ointments, powder, liquid oral, suspensions. So when you have actually different buckets, that becomes a huge basket. And whether it is the ROW market or a regulated market, there is an opportunity for specialty products. So the differentiation has to happen in the products and marketing. And that happens, definitely we are bound to grow in leaps and bounds.
Okay. Thank you. All the best. Congratulations for a superb performance.
Thank you, sir. Thank you very much.
Thank you very much. Next question is from the line of Harshal Patil from Sharekhan. Please go ahead.
So just me.
Sorry, Harshal Patil.
One is on the.
Hello.
Yeah. Am I audible, sir?
It's audible.
Sir, So, sir, I just have 2 questions. One is on the US thing. Probably in FY21, we've launched about 8 odd products, and we've got a market share of about 7 to 12%. This year, we have kind of planned about another 7 to 8 product launches. So, sir, how should we look at the ramp up of market share? Any number that you would have in your mind which can be achieved over the next 1 to 2 years in the US?
Yeah. So when it comes to market share, I think the bare minimum expectation from our side is to touch at least 10% on each of the products that we launch. And in some products, we have gone better than that. And in some products where it's much more commoditized, we expect to have at least fair market share. That is, number of players divided by, the overall market. But as a rule of thumb, you could probably say that anywhere between 10 to 15% market share in any generic product that we launch is a decent target. Yes.
Okay. Got that, sir. That's one. And sir, second thing, I missed your comments on the India business. So when you said that you had forayed for the amphotericin thing, so sir, any flavor on the opportunity that you would be looking around, or are we like it's still early stages? Any flavor on that?
India business, when I say they think of actually the brand marketing, which the big boys do. We are not getting into brand marketing. This is going to be an institutional sales. Since you mentioned amphotericin, there is an amphotericin called liposomal amphotericin, which is a very unique product. Hardly 8 to 9 companies that manufactures in India. We are also going to be one among them. So this product is a product which went into scarcity, like 3-4 months back. So this is one of the products that we are going to manufacture and sell it in the local market. The same way we have some specialty injectables that of course we are planning to sell. The model would be, first we would prefer to go for a co-marketing with an established player who has been supplying injectables and other products to the hospitals. If that doesn't happen, then we will have 2-3 models. One, we will also try our own in the form of going for some 3-4 representatives per state and sell the product. And we will also do contract manufacturing for big companies. For example, Cipla. They gave a very good order for enoxaparin now. We are currently manufacturing that product. The same way, there are 3-4 people who have come forward to do contract manufacturing with us. So all this, if that adds value to the company, we will definitely do it, but not in the form of brand marketing, which the conventional people do it. This is a different kind of. It's not a prescription-oriented business. It's a purchase kind of a business by the hospitals.
Okay. Got that, sir. Thank you. That was it.
Thank you very much, sir.
Thank you. Due to time constraints, that was the last question for today. I now hand over the conference to the management for closing remarks. Over to you.
Thank you, Amey and the Haitong team. Thanks to everyone that participated in our earnings call. We hope you stay safe, and we look forward to being in touch with you. Thank you very much.
Thanks to all of you. Stay safe and stay healthy. Thank you. Thank you so much.
Thank you very much. Ladies and gentlemen, on behalf of CAPLIPOINT Laboratories and Haitong Securities, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.
Welcome. Thank you.